Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, Wednesday, January 10th. Yesterday, I was sick. I'm still a little bit sick, but I couldn't upload any video. I didn't trade. But today, I'm more or less coming back. So sorry about that. But today, it's a really weird day. I was expecting an inner candle body breakout on the daily on the Nasdaq, pretty technical pattern that usually explodes to the upside, but we are still holding negative on the daily bearish fair value gap that we are going to see on the charts. But first, let's start with the NBA 30-year mortgage. Look at this, an uptick on the 30-year mortgage rate, 6.81 instead of the 6.71. Despite that, applications are still up 10%. So people are eager to really apply for mortgage rates, even though we are almost at 7%. Imagine when the rates really go lower, the amount of demand that there will be for these mortgages. So I think the households are still eager to really seeing lower and lower below 6. I think it's going to be awesome, hopefully this year, but nothing else. Everyone is waiting for tomorrow in terms of CPI data. The outlook is an uptick on December. Remember that we are watching for December CPI rates, and the outlook, as I was saying, it's an uptick in both year over year and also in month over month. Hopefully in December is the last time we see a little uptick on inflation, and this year it's continuing to the downside. That's what Fed and everyone and markets are already predicting. But remember that the path of rate cuts for this year is quite aggressive, and missing any kind of expectation will be a disaster. So watch out these numbers: 3.1 on the general inflation and 4% on the core inflation would be the highlights. So now that we covered the fundamental analysis, let's talk about technical analysis. And as I was mentioning, let me just show you, we are in this daily fair value gap. I was watching this candle as an inner breakout on the S&Ps. I think it's a little bit more clear. As you can see, this is an inner candle that was supported to the upside, and usually this pattern resolves to the upside. It's big push, take profits, another push. In this second round, on the S&Ps, we don't have any, and the ES futures, we don't have any fair value gap up here. The only thing that we have is this relative equal highs. But on the Nasdaq, we do have a daily fair value gap due to the fact that the Nasdaq sold off more than the S&Ps. But this is still opportunity. We are in this fair value gap, and this looks bullish. Even though this fair value gap might not hold, if we break out of this fair value gap, I think our next stop is even more bullish at 17,165. So that's my overall bias. Now let's talk about the little nuances that make this day a really difficult day. Remember that yesterday, sorry about these fair value gaps, the gray area, because we are, as I was saying, we are overlapping this fair value gap in red, and also this 30-minute chart. As you can see, I have a fib retracement here for this 50% retracements of this gap. That was my target today on the 30-minute chart. As you can see, this is yesterday's pullback on the pre-market, the push into the open, consolidation. During pre-market, I was saying super tricky today. Why? Because we resolved all the liquidity to the upside, and we did 100% retracement in the overnight. For now, into the open, trying to push higher. So this is a really difficult price action to trade. I always trade London Open, as you can see. And if you have been following this channel, I really like the London Open, but this was, let me just get rid of the daily fair value gap now that we commented on that. Let me just remove those. Let's go back to the 1 minute. So this was the thing that I was watching. During pre-market, we have this 15-minute fair value gap bullish that we held in this push to the downside with sell side liquidity taken. But look at this. I was super frustrated because there's no fair value gap in here. There's nothing. And even though we push this inverse and we took 1, 2, and 3 liquidities in the up in the up way to the upward to the upside, we even took yesterday's high. But I couldn't find any setup. I'm not going to jump into anything without having my setup. That's my strategy. It has certain criteria that it needs to meet. And this price action is the only thing that I got is this inverse being taken. We got displacement to the downside. We didn't have displacement to the upside, nor a fair value gap. So that is low probability in my experience. It worked, but then it didn't work. And I took this liquidity. This liquidity, sell side liquidity, look at my note. Both ES futures and the UK 100, the FTSE index, were taking liquidity at this specific point. So we took that, we had an inner candle, more or less fair value gap down here. We got one here and another one here. So I took the trade, this trade's 2. Basically risk reward ratio 2. And as you can see, I was targeting this liquidity. Why? Because my expectations were really low. We were trying to push higher and we retraced almost 100%. I'm just taking the first liquidity. And the first target was here, 18 points, $400. That's enough for me. That's enough. I'm sick. I'm not 100% focused on the market, and that's why you take profits. Look at this. We continue on our way down until the open. And into the open, we took these relative equal highs. As you can see, I'm not trading the open. There's nothing chart, but let me just show you what happened. We took this liquidity instantly, a lot of sellers up here. So this liquidity was not the real target. We got this after a big displacement lower and then the push higher. Remember the liquidity taken out and also pre-market low. This green dashed line got taken also and then the real push. Everything is manipulation or equilibrium to a fair value gap. Remember that. That's the 1 minute fair value gap that we got. And then we have this liquidity up here that it's not, or now it's not taken out. So buy side liquidity we have also here. So we have these two highs that in pre-market usually get taken out during regular trading hours. And as you can see, we are trying. We are respecting bullish fair value gaps like this one. PIM, 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 and PIM. And we are not respecting the inverse like this one. It's still choppy price action, but I think there's potential to the upside. And this green is the 0.5 pip retracement, so I think we can have a clear target there. This is the fair value gap inverse. This is the fair value gap, and this is the 50% retracement, and then we have last week high up here, or last week low. It's last week high there. So be patient. There will be opportunities. Today looks bullish, but Tesla is in the red and Apple is still in the red. Dollar is also in the red. That's helping the equities market, but treasuries are not super strong and small caps are in the red. Look at this push to the downside and then the V reversal. So we are more or less mixed sentiment, leaning towards maybe some bearish price action, but I think today we are gonna get rid of this liquidity up here and we can push 16,900, something like that. We are almost there. So tomorrow CPI, be smart. I think the daily on the Nasdaq, it's setting up for squeeze into this inverse fair value gap into this and higher. Everything depends on tomorrow's reading on CPI. I think the uptick on inflation would be bad news, but anything can happen. You have to focus on risk management to be successful. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. We have potential to the upside. I think we look pretty bullish, but remember that anything can happen, and that's why discipline and risk management are your key for your success. Stay safe, everyone, and see you tomorrow.